Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and a very good afternoon to our lecturer, Madam Siti Fatimah Nur binti Minhad. Today, we will present the group project FAR620 about consolidated financial statement. Before start our presentation, I will introduce myself as long as my group members. My name is Muhammad HASIF bin Muhammad Said. I am from MAC2205D. And here is my group members, which is Muhammad Amir bin Abdul Rahim, Muhammad ADNIN bin RAMLI, and ARIF ZAKWAN bin Ali Akbar. Okay, so I will explain about the question 1A about finding the goodwill of Mas Berhad. So the consideration transfer here is 490 million minus to 100 million. We get the 390 million. The 490 million were given in the software provided, and the 100 million also given in the software provided under debenture. And then since it acquired 80%, so the NCI percentage will be 20%. The 344 million with is from the FBNA. To find the FBNA, we will find the ordinary share capital. The ordinary share capital we took it from the statement of change in equity. And then the ordinary share capital, 300 million. They also take from the Sochi 20 million. This 15 million. This is asset revaluation reserve, 6 million. Asset revaluation brand, 3 million. And those will get the fair value net asset. So the NCI will be 68.8 million. And then the impairment was 3 million for 2 years. So it will be 6 million. And then we will get the goodwill is 108 million. Next is question 1B about finding the goodwill of Tanjung Berhad. Stated in the question here, acquisition on Tanjung Berhad was indirect acquisition. 80% here is the acquisition of AKBAR to Mas Berhad. So the 148 million here is the consideration transfer. We will divide, we will be times it, and here we get the 118.4 million. Next we get the NCI 52 million, 52%, I'm sorry. The 52% here, we get it from finding the indirect percentage, which is 48%, and then the balance will be 52%. The 50% is the NCI percentage. And then 199.5 million we get from the FVNA here. Next, we find the FVNA here. The ordinary share capital is 200 million. 200 million were given in the statement of change in equity of Tanjung Berhad. Next is retained profit brought down, 4.5 million. Profit for the year, since it lost, so it will be in negative figure, times with 6/2 months. So we get the negative 5 million. And then we get the fair value net asset here. And then we get the goodwill. Okay, the question here, what if the consideration transfer and NCI is lower than the FBNA? We will get the bargain purchase, which is we get more profit on it. Okay, next is question 1C, gain or loss on the second acquisition of Mas Berhad. On the 1st September, AKBAR acquired Mas additional 10% more for cash consideration for RM 13 million. So the 13 million here is the consideration transfer. Next, we find the FVNA, fair value net asset. For the ordinary share capital, 300 million. We take it from statement of change in equity given, 300 million. The retained profit brought down, also take from the statement of change in equity, 102 million. Profit for the year, also we take from the statement of change in equity, 30 million. Revaluation reserve brought down 30 million. also take from the statement of change in equity. So we get the 462 million here. Now we need to find the interest on the second acquisition times with 10%. We get the 46.2 million here, and then after do the math here, we will get the gain on the second acquisition 33.2 million. Okay, so what if the interest is lower than the consideration transfer here? So we will get the loss on the second acquisition. Next, I will be explaining about the carrying amount of investment in associate for Bunga Berhad. Investment at cost here. The cash consideration is 60 million. So the investment at cost on Bunga Berhad is 60 million. At post-acquisition reserve, 40%. Since AKBAR had acquired 10 million out of 25 million, it considered as 40% on acquisition. So the post-acquisition percent here is 40%. For the post-return profit for the year was 28 million on the 31st December 2020. Since it was acquired on the half of the year, 1st July 2020, there will be 6 over 2 months. The post return profit here will be 14 million. Then we will find the post acquisition reserve associate after times it. Do the math here. You get the 5.6 million here, and then we do the math here. We get the carrying amount to soft P. So this amount will be bring to soft P.
Okay, now I will be presenting about AKBAR Berhad Property Pengusian. Okay. First, I will be focusing on the adjustments. So this 6 over 12 because must acquire Tanjung in the middle of the year on 1st July 2020. And this minus 10 million is from the goods sold from MAS, a subsidiary, so it needs to be eliminated. This minus 6 million is due to AKBAR sold goods to Tanjung. Okay, cost of sale. For Tanjung, we times 6 over 12 to minus 10 million as before, plus 1 million. This 1 million is the URP 20 over 100 times 10 million times 1 over 2 from the goods sold. From the goods MAS sold to AKBAR, and we time 1 over 2 because 50% remain in the closing inventories. Another 1 million here. URP, how we get this? 6 million minus 4.5 million. We times 2 over 3. We times 2 over 3 because it is the remaining goods that Tanjung hold based on the loss on disposal of PPE. 1 million because dispose of equipment to MAS Berhad, there is a unrealized loss. That is why we minus 1 million to eliminate because AKBAR sold to MAS. As for investment income, this investment income we minus 12 million because in Sochi of MAS paid ordinary share 15 million and AKBAR entitled to get just 8%, which is 12 million. For interest income, we minus 4 million. How we get 4 million is 6% times 150 million times 8 over 12 times 2 over 3. We get from the additional information 6. MAS has recorded and paid interest for the first 8 months, 6 million. AKBAR Berhad entitled to 2 over 3 from 6 million. That is why we minus 4 million to set it off. For admin, we take from Sopel, and for Tanjung, we times 6 over 12. And this 0.1 million is the under-provided depreciation. Under-provided depreciation due to the loss sold equipment to MAS Berhad. Okay. For selling and distribution, there is no adjustment. Only for Tanjung, times 6 over 12. For finance cost, as before, Tanjung 6 over 12 minus 4 million. 4 million. The 4 million is the interest income that we set off from the interest debenture. From the interest debenture must be to AKBAR. this plus 1 million is from 9 million times 4/12 times 1/3 is the interest debenture that Mas Berhad needs to pay to its NCI for another 4 months. Okay, now impairment of goodwill. Impairment for the year is 3 million. We have taken from the additional information. Why not 6 million like reputation of Mas Berhad goodwill? It is because Propel only record transaction for the current year only. Okay, now for the post-acquisition reserve in Bunga Berhad, 5.6 million is from the computation of the carrying amount of investment in association Bunga Berhad. Okay, next is the taxation. The taxation is directly taken from the SOPL. And then the other comprehensive income for the ARR land AKBAR of 20 million is from the additional information 7. The land revenue tax a surplus of 20 million. What if it is happened before the year 2020? It will not be recorded here. It will be recorded in Sochi. As for ARR land Mas Berhad, of 2 million as per additional information 8. Mas has not yet recorded the surplus of the land. The last one is the gain on second acquisition. This 33 million.2. As per question 1C,
Assalamualaikum. My name is MUHAMMAD RAMLI and I will continue the presentation about the profit attributable to the parent and NCI. Before I continue, I would like to ask one question. Why we need to calculate this profit attributable to parent and NCI? The answer is because we need to separate the portion of the profit after tax to parent and NCI shareholder. So to calculate the profit attributable to parent and NCI, first we need to take the amount of profit after tax from the SOPL, 130 million, and we put here. And then we also need to take the amount of total comprehensive income, 185.2 million, and we put here. And then we need to find the amount of NCI first. So amount of NCI I will show you in the working one. In the working one, we want to find the amount of share of profit to NCI. So NCI for the Mas Berhad, we have the profit for the year 45 million that we get from the Sochi of Mas Berhad, and we also need to minus unrealized profit of inventory 1 million. This is from the additional information number 2, where Mas sold goods to the AKBAR. And then we also need to minus the debenture interest 3 million. This is from the additional information number 6 that state that the debenture interest that Mas Berhad need to pay for another 4 months. And then we need to minus the preferred dividend 4 million. This is we just take from the Sochi of Mas Berhad. However, we also need to put 4 million here because 100% belong to NCI. And so we get the total here 37 million, but we need to portion it to the 8 million at 8 months and also 4 months because the second acquisition of Mas Berhad is on the 1 September 2020, and then we need to time with percentage during this period. So for the 8 months is 20, and for the 4 months is 10%. And then so for 8 months we get 4.93 million, and for the 4 months we get 1.23 million. So the total of NCI of Mas we get 10.16 million. And then for NCI of Tanjung Berhad, we have the profit for the year. We get loss 5 million. We get this amount from the Sochi where it state that loss of 10 million, but we need to time with 6 months because the acquisition of Mas to the Tanjung Berhad is on the 1 July. So and then we need to minus the preferred dividend 2 million. This is we just take from the Sochi of Tanjung Berhad, but we also need to add 2 million here because 100% belongs to NCI. So the total we get here is 7, and then we need to time with 52%, which is indirect NCI percentage. So we get 3.64. So the total here is we get 1.64, which is loss. And then the amount of 10.16 million of for Mas we just put here, and also for Tanjung Berhad negative 1.64 million we put here, and then the balance is belong to parent, which is 121.48 million. And for the other comprehensive income for the Tanjung Berhad, we can just take we can just put 1.64 million, but for the Mas Berhad we need to add with surplus of land of Mas Berhad 2 million, and then we need to time with 10% is NCI percentage, so we get the 10.36 million, and the balance is we belong to the parents 176.48 million. So I have the additional question, what is the meaning of the parent and also NCI? So the meaning of parent is the company that has the control directly or indirectly over the subsidiary. And for the NCI, according to MFRS3, define that NCI as equity in a subsidiary that not attributable or directly or indirectly to a parent. Now I will explain about the consolidated statement of changes in equity. I will divide the equity into the group return profit, non-controlling interest, and group reversion reserve. First, we need to find the amount of opening balance, but I will show you the calculation in the walking to later. Next, we have the profit for the year. We can take the amount from the calculation that we have made before for the profit attributable to parent and NCI. For the group return profit, we have 121.48 million, and for the NCI for Mas Berhad, we have 10.16 million, and for the Tanjung Berhad, we need minus 1.64 million because of loss. And then we had the acquisition of Tanjung Berhad. For the NCI, we add 103.74 million, and then we have changes in shareholding. In group return profit, we add 33.2 million because of gain on the second acquisition of the Mas Berhad. And then for the NCI, we need to minus 46.2 million because of the decrease in the NCI. And then we have asset reversion reserve for the land AKBAR. We just put in the group reversion reserve 20 million, and then we have asset reversion reserve for the land Mas Berhad 2 million, but we need to portion it to NCI and also group reversion reserve. For NCI, we need to time with 10%, so we get 0.2 million. For the group reversion reserve, we need to time with 90%, we get 1.8 million. And then we have impairment for the Mas Berhad, so we need to minus 3 million in the group return profit. So, and then we have dividend, ordinary share, and then so for the group return profit, we need to minus 35 million. How we get 35 million? This is after we add 15 million from the SOCE and another 10 million from the additional information number 4. For the NCI, we minus 4 million. How we get 4 million? This is we add 3 million for the interim dividend for the NCI and another 1 million for the final dividend for the NCI. And then for the preference share dividend, for the group return profit, we minus 6 million. We can take directly from the SOCE of AKBAR. And then NCI, we also minus 6 million. How we get this? This is after we add 4 million from the Mas Berhad and 2 million from the Tanjung Berhad. And now I will explain to you about the working to find the amount of opening balance. So NCI for Mas Berhad, we put in the NCI column 68.8 million. And then we have NCI Tanjung Berhad for the indirect. We need to minus in NCI column 29.6 million, and then we have the preference share capital for the Mas Berhad and Tanjung Berhad, so we can take directly from the SOCE 80% for the Mas Berhad and 40% for the Tanjung Berhad. We put in the NCI column, and then we need to calculate the return profit for the Mas Berhad. So for the opening balance for the RP of Mas Berhad, we have 102 million, and then we need to minus the pre-RP 20 million, so we get 82 million, and we need to portion it to the group return profit and NCI. So for the group return profit, we need time with 80%, so we get 65.6 million, and for the NCI we time with 20%, so we get 60.4 million. And then we calculate the return profit for the AKBAR Berhad. We can take directly from the SOGE of AKBAR Berhad 200 million and put in group return profit. And then reversion reserve for the MAS Berhad, we take from the SOGE of MAS Berhad opening balance, we get 30 million, and then we minus pre-reversion reserve 50 million, so we get 50 million. And then we need to portion to non-controlling interest and group reversion reserve. For NCI we need to time with 20%, so we get 3 million, and for the group reversion reserve we need to time with 80 million, so we get 12 million. So for the AKBAR we just put directly to the group reversion reserve 60 million. So we get the amount of opening balance for the group return profit 265.6 million, and for the NCI 178.6 million, and for the group reversion reserve 72 million. So we take this amount and put in the SOGE for the group return profit, NCI, and group reversion reserve. So we will get the closing balance for the group return profit to 376.2 million, 28 million. For the NCI 234.86 million, and for the group reversion reserve we get 93.8 million. So my additional question is, why we not calculate the balance brought down of the equity for the Tanjung Berhad? The answer is this is because the acquisition of the Tanjung Berhad is on the 1 July 2020. Because of this, we do not calculate the balance brought down on the yearly year for the Tanjung Berhad.
Assalamualaikum warahmatullahi wabarakatuh. My name is MUHAMMAD bin Abdul Rahim. I will present about consolidated statement of financial position as at 31st December 2020 for AKBAR Berhad. For the first item under non-current asset is property, plant and equipment, 609 million plus 388 million plus 264 million taken from the SOFP. 1 million plus 1 million is unrealized profit from said equipment, minus 0.1 is under provided depreciation equipment, and plus 20 million is asset revaluation reserve land by the AKBAR Berhad. 2 million taken from the asset revaluation reserve land MAS Berhad, and 6 million is asset revaluation reserve on first acquisition MAS Berhad by AKBAR Berhad. So the total will be 1289.9 million. The second item under NCA is goodwill taken from the question A and question B. So the amount will be 131.44 million. The third item is investment in associate Bunga Berhad. The amount will be taken from calculation investment in association in question C. So the amount will be to 1.6 million. The intangible asset 7 million plus 2 million plus 6 million will be taken from the SOFP, and 3 million is from brand that taken from location, which is hesitated not recognized yet. So the total of IA is 80 million. We go to the current asset, which is inventory. 50 million plus 48 million plus 94 million taken from SOFP, minus 1 million and minus another 1 million. 1 million is unrealized profit from sale credit MAS Berhad to AKBAR Berhad, and another 1 million is unrealized profit from sale AKBAR Berhad to Tanjung. So the amount of inventory is 190 million. The trade receivable 30 million plus 65 million plus 86 million is taken from SOFP and minus 5 million. 5 million is 50% settlement. So amount of payment will be 5 million and minus trade receivable. So we go to the bill receivable, 20 million plus 58 million and 57 taken from SOFP, and 9 million came from half of bill payable split in favor, which is 50% times 26 million. and minus 4 million. 4 million is discounted, 9 million is undiscounted. So we go to the bank. Bank 41 plus 44 plus 1 is taken from SOFP, and 30 million is consideration transfer of the second acquisition of Mas Berhad. Okay, we go to the question Q&A, that question that I have been create. The question is, if question stated or record the consideration transfer, if question tell that they have record the second acquisition, which is consideration transfer, no need to record because it can be double counting. So if has stated, but if not stated, we need to record. So the total asset, it will be 2025.94 million. We go to the equity. Equity have share capital, group return profit, non-controlling interest, group reparation reserve. Share capital taken from SOFP but only holding only. Group return profit, NCI, group reparation reserve taken from SOCI. We go to the non-current liabilities, 6% debenture. The calculation will be 150 million times 1 over 3. 1 over 3 is come from NCI, another 2 over 3 no need to record because set off due to acquisition by holding. We go to the bank loan. Bank loan just taken from the SOFP. So the amount of bank loan is 278 million, and amount of debenture is 50 million. We go to current liabilities. Trade payable, 72 million plus 40 million plus 45 million taken from SOFP. 5 million is half payment. Since AKBAR has settled half payment, so 50% times 10 million. So we go to the bill payable. 46 plus 21 plus 26 taken from SOFP. 9 million is half of bill payable, still in favor. So 9 million is undiscounted. We go to the accrual. Accrual just taken from the SOFP. Ordinary dividend payable, 20 is dividend paid to members by AKBAR, and 1 million is dividend paid to NCI, which is 10%, which is 10 million times 10%. 10% is NCI after second acquisition of Mas Berhad. We go to the interest on debenture. Interest on debenture is 6% times 150 million times 4 over 12 times 1 over 3. 4 over 12 is month that not recorded yet, and 1 over 3 is interest that need to pay to NCI. So the total equity and liabilities will be 2025.94 million. Thank you. So okay, we go to the question 2A, which is we write the I will tell about the answer for the question 2A only, not explain too much. So the answer will be since Mega Berhad has the highest interest, which is 40%, Mega Berhad acquire Daily Berhad with acquisition methods to control, so they can make decision for the company. However, since the decision about relevant business activities have the unanimous concerns of all the companies sharing control over, Turkiya Berhad and B Berhad also have power to control Daily Berhad. Therefore, Damia and Delisha cannot prepare a consolidated financial statement according to MFRS 10 because Mega Berhad has joint control over Daily Berhad with other companies. In this case, since the decision of relevant business activities of Daily Berhad have the unanimous concerns of all the companies that share the control, and all companies are bound to contractual arrangement, Mega Berhad, Turkiya Berhad and B Berhad will make them entitled to control Daily Berhad as a subsidiary because had all the characteristics of MFRS 11 joint arrangement. Okay, another answer is according to MFRS 128 investment in associate and joint venture, if the entity holds directly or indirectly less than 20% of the voting power of the investee, it is presumed that the entity does not have significant influence and treated as an ordinary investment. In this case, Mega Berhad holds 40% interest on Daily Berhad, which is more than 20% of required voting power of the investee, meaning that Mega Berhad will have the largest portion of voting powers. Thus, Mega Berhad can be considered the parent of Daily Berhad because it holds the highest interest in an entity and is able to control Daily Berhad due to its equity interest acquisition. The Q&A, the question that I have been created is, what the difference for rights to the asset between joint operation and joint venture? The difference between joint operation is the parties to the arrangement share all interests, which means title or ownership in the asset relating to arrangement in a specified proportion. The proportion meaning that in proportion to the parties' ownership interest in arrangement, or in proportion to the activity carried out through the arrangement that is directly attributed to them. The difference between joint venture is the asset brought into the arrangement or subsequently acquired by the joint arrangement are the arrangement asset. The parties have no interest, which means no title or ownership in the asset of the arrangement. Thank you.
Question 2B asks us to discuss the relationship of Oak Berhad and Beach Berhad before and after the share buyback. So the answer is the relationship between Oak Berhad and Beach Berhad before the Beach Berhad redeem the share is associated because the percentage of control is only 40%. The share buyback 30 million from the Beach Berhad reduced the existing share from 100 million to 70 million and result to increase in the shareholding by Oak Berhad in the Beach Berhad. Even though the number of shares that acquired by Oak Berhad still remain the same, which is 40 million shares. As the result, the percentage of the control of Oak Berhad in the Beach Berhad increased from the 40% to the 57.14%. There will be changes in the relationship between the Oak Berhad and Beach Berhad, and now the relationship changed from the associate to the subsidiary because Oak Berhad acquired more than 50% of the control in the Beach Berhad. So my additional question is, what is another implication in the piecemeal acquisition? So the answer is the changes in the relationship between the investor and investee give the impact on the consolidated financial statement. Second is computation and accounting treatment of the goodwill. And lastly is the accounting treatment of the investment in the financial statement of the investor.
Okay, as for question 3, we find the goodwill. So, and this is the format. Okay, first the CT, the consideration transfer is 30 million as per question. Then we plus with the NCI 20% times 25 million. 20% is because he Berhad holds 80% of Q. Now we get 5 million. We add these two and we minus with the FVNA of 25 million. So we get the goodwill of 10 million. Okay, now we find the gain or loss on disposal on subsidiary. For he Berhad, the proceeds received is 50 million minus with the carried amount of investment 30 million times 40%. This 40% is because previously he holds 80% and then he disposed 50%. 80% times 50% is 40%. So we will get 12 million. And so the gain on disposal for he Berhad is 38 million. As for consolidation, the proceeds received is 50 million. We add with the fair value remaining investment of 20 million, and then we minus with the fair value net asset on January 2021, 70 million times with 80%. So we get 56 million. And then we left with the goodwill that we calculated earlier of 10 million, and we get the 4 million of gain on disposal for consolidation. For question 3B, the question asks about the relationship between Hihi and Cucu after the disposal of 50%. Okay, in January 2015, Hihi acquired 80% in Cucu, which made Hihi become a holding in Cucu as its subsidiary because Hihi holds more than 50%. However, on January 2021, the relationship between Hihi and Cucu changed from holding company and subsidiary to associate, and Hihi Berhad lost control after Hihi Berhad disposed the shares in Cucu. It is due to the controlling interest of 80% become 40% after Hihi disposed 50% of its interest in Cucu. It is because the 50% times with 80% will get 40%. To Adam Berhad, makes Cucu become an associate of Hihi Berhad. It is because the HEHE holding only holds 40% shares in Cucu, meanwhile non-controlling interest in Cucu now is 60%. Thus, the relationship HEHE to Cucu Berhad is now become an investment in associate and only has a significant influence in Cucu Berhad.
Okay, next I will be explaining about the question 4. According to MFRS 10 Consolidated Financial Statement, power arises from existence of right. Power could result from the voting right and or voting embedded in the contractual arrangement. In this situation, power arises holding a majority of the right. The standard stated that the investor hold more than half of the voting right of an investee. In the question, Apple Berhad believes that it controls grapes due to majority voting, right, as compared to the other stakeholder in Great Berhad. But Apple only hold 45% of the voting right, which is not over the 50% here. So it is insufficient to determine Apple Berhad has power over Great Berhad. On the other hand, there is also a power without a majority of the voting right, known as de facto control. It is where an investor may have power even though hold less majority of voting right of an investor. This occurs in the following situation here. Okay, referring to the question, Coconut Berhad meet the third condition, which is stated that Coconut Berhad would have the power to direct all relevant activities related to marketing issues due to their expertise in that field. Stated here that the Coconut Berhad meet the third condition here. Third condition here, the investor has the practical ability to direct the relevant activities unilaterally. So, Coconut Berhad have the power over Grape Berhad since Coconut Berhad has the power to direct all the relevant activities related to marketing issues due to their expertise of that field.